Hi friends, welcome back. So headline, S&P 500 heads for its worst week since the collapse of Silicon Valley Bank. If you guys remember that, we talked about on the channel, that was the regional banks when we had the big bank run and scare. Now another headline, S&P 500 tumbles Friday to post worst week since 2023. NASDAQ drops 2% for the worst weekly performance since 2022. And essentially, a lot of these losses are due to your bubble stocks like your Nvidias, your Teslas, etc. Also this, if you look at the markets themselves, a lot of red out there, like really a lot. So as I mentioned with the bubbles, Tesla 8% down, Nvidia 4% down, Broadcom down 10%. You have Google, Meta, Amazon all down 3-4%. You have Apple, Microsoft down. I think Apple is going to have their new iPhone announcement in a couple of days, and the trick's going to be, hey, do we have any technology that you want to buy? My feeling is from the early leaks, no, not really. And that's obviously going to hurt companies, right? If they don't have anything that people want to buy, how are they going to make money? If you look at the jobs, because we had some jobs numbers today, and that's essentially why we have a growth scare and sort of why stocks are going down. Because essentially, when you think about investing, you buy stock or ownership of a company because you want it to make money in the future. You want their profits to grow, right? You want things to be steady. But if you're worried, I gave the example of the Apple thing of like, man, I don't think any of your new products are going to really make you any money. Or you look at something like Tesla of like, okay, you're trying to sell me yet more vaporware, right? This kind of stuff. And then you look at jobs and you're like, okay, our economy's not growing that great. Moreover, we actually had a downward revision on jobs. So basically from the last numbers we got, 86,000 jobs that were originally reported just basically vanished. Essentially how this stuff works is that the Bureau of Labor Statistics, they reach out to various employment sites and say who's working, not working, etc. If a site doesn't report data back, they kind of estimate it, and so sometimes their estimates are wrong. The last time they did this kind of thing, we guys talked about it on the channel. It was like the biggest estimate miss since it was like 08, 09 kind of thing. Again, this is another downward revision. So the numbers that we're getting today of soft hiring numbers, they could get revised again, possibly downward. You don't know. They could go, theoretically, they could be revised upward, but I'll say, guys, this is sort of why I cover individual companies all the time and say, hey, look at this company's laying off, or this company's slowing down, or this company's switching CEOs. Because I think it's, at least to me, it's obvious that there are weakness out there in the economy. But I say this all the time. Everything depends on your neck of the woods, right? Everything depends on your individual situation. So, for example, I talked with you guys before about the airline situation where flight attendants are struggling. Just the pay isn't that great, but it depends on which airline you're at, right? So I showed you guys this chart. If you haven't seen it before, it's a really interesting one. If you're like at a Frontier or JetBlue, you just don't get paid that much in comparison to an airline like a Delta, right? You get paid a lot more at Delta. Also, too, it's just my opinion, and I don't work for Delta, but just my opinion. I always, if I have to fly a U.S. a carrier, I think Delta's the best, and as it turns out, they pay their employees the best. So everything triggers from that. Moreover, when I talk about say jobs or the situation that we're in, there's a lot of workers that are going on strike or threatening to go on strike. It's a real thing. I'm sure you know this. With inflation, so be it your rent's going up, your mortgage up, and this is a major chunk of your life, or food, energy, etc. And the question I always pose to you is, do you feel like you're getting paid enough at your job to keep up with where expenses are? So say like at AT&T, this says here, 17,000 AT&T workers across the Southeast strike over contract negotiations, right? Or you have something like this, right? I mentioned you guys before on the channel, the hotel workers went on strike just over the weekend. Or you have something like this. This is actually an interesting one. The longshoremen, basically the people that work the ports, they may go on strike. So they have their contract that they're negotiating, but that'll be like beginning of next month, so October 1st. And this is something that guys, don't think that everything's going to go to zero and we're all going to quit our jobs and stuff like that. It's not going to be like that. It's more like the job that you're at now, like if you're at your job, you most likely, well, everything depends on your situation, but I'll say most likely they're not hiring like crazy. Now, I'd be curious though, because I like to hear from everyone in our community, like in your industry that you're in, is your company hiring? And if so, what jobs? Please tell us, because there may be a lot of people who are looking. And in fact, we do have numbers on this stuff, but I just like to hear from people in the community. So if you're curious, like, okay, where are the jobs? Leisure and hospitality, you can say they're adding jobs. Healthcare, it's been like that for a while. There's just a lot of jobs. So like nurses, elderly care, these kind of things. I think there's always going to be need for that. And I think there's going to be growth in that because our population in the USA just keeps growing. But that's not just USA, it's many countries around the world. Then you can see you got government jobs, construction, a little bit of financials. This is where, again, where we're adding. We're losing jobs in the like tech sector, right? Information, retail, and also manufacturing. Manufacturing has actually been weak out of Asia also too. We had weak data there. And then you want to track all of these things. So for example, how could this stuff be connected? So let's say you have weaker manufacturing, we'll just say, for example, in Asia or USA, then maybe the not making so many goods and not shipping so many goods around the world, and then the long people who work, the ports, longshoremen may have struggles. Or, if there's not so many things flowing around the world in terms of trade, then maybe the railroad people will struggle, et cetera, right? And then you want to think about how we're all connected. If one group of people, is not working, shifting goods, that affects another group of people. So then say the retail, people who work in retail business, well, we're not selling so many goods, we're not hiring there, et cetera. Or for example, and I just want you guys a sense of how we're all connected. If people are worried about their future, then maybe they're not going to go to, casinos and well, maybe they do. Actually, it's opposite. I use a casino as a bad example. But we'll say maybe if you're worried about your future, maybe you're not going to go to a sporting event because it costs a lot of money to go to a sporting event. But in the reverse, kind of a negative way, maybe you're not so, worried about the future, then you're going to be taking gambling and risking all your stuff to go to the casino to try to figure out a way to make it work. One of the things that I do want you guys to think about this stuff is when you think about investing in money is which side of the line do you want to be on? And I'm talking about, say, pick a line, for example. Would you rather be on the ownership side or would you rather be on the worker side that's like asking for more money? Now, for many people, you can be on both sides. So I pose it as an either or, but you can actually be on both sides. The point I'm trying to make is that when you think about your life and your money, you think, hey, I want to take ownership in a company. I want to take ownership in business, and I want to be basically profit sharing. And that's something actually, it's interesting, we talk about the airlines. That's something that Delta does, is they profit share with their employees. Some companies do, some companies don't. Some companies may give you, stock options, these kind of things. It all, depends on your situation. But the reason is, and I mentioned this article before, it was an interesting one. It said asking people, how do you feel about the economy? Depends if you, have stocks or not. So stocks have actually been doing fairly well this past year, but just, recently with the growth scares and also too, a lot of profit taking, because this is how it works. Stocks go up, and I'll give you guys an example here. Stocks go up, but if you don't sell it, you don't actually make any money on said stock. It's all paper gains, right? So I think a lot of this stuff is hey guys, the bubble, and this is Nvidia, which is one of the biggest bubble stocks this year. Because the concept is we're all buying these chips because we believe AI is going to make us a whole bunch of money, right? So when companies they have been buying the said chips, but now they got to actually prove, do these chips actually help companies make money? If they do, sure, they buy more, but they might not be, right? This may not be the greatest investment of all time kind of thing. One of the things that I always am concerned about this whole chip fiasco, I'm just talking about NVIDIA here, is that let's say, we all buy these AI chips to replace our human workers, and then we all, buy Tesla stock because they're going to build robots. That's what Elon Musk keeps promising you. And we're going to replace all the, human workers. Well, okay, so if all these human workers are going to be replaced and no one has a job, where's the money going to come from anymore? How does the economy even function? And so that's something I always just want to caution you guys about. There are, real humans on the ground that say, hey, I want a job too. I don't want the robot to replace me. And there's some jobs that robots can't replace. So again, we're all connected, and just understand how this stuff works. And how can I say? Because guys, I know how it is. Really, trust me, I really know. Because I see this stuff and I'm like, oh my god. And full disclosure, my wife and I we have too much exposure to chip stocks. We're in Korea, so Korean chip stocks, be it your Samsung, Hynix, et cetera, right? This kind of stuff. But it doesn't necessarily mean that all of our eggs are in that basket. I'll just say I wish we had less exposure to this stuff myself. But it's hard to get around it because even if you just buy S&P 500, you're going to be exposed to NVIDIA, right? It's just how it is. NVIDIA's gains, at one point it was some crazy number, 40% of all the gains in S&P were NVIDIA, AI stuff. It's crazy. So we're all exposed to this in one way or the other. But the thing is, what you want to be thinking about is, okay, if it looks like weak, growth in the future, it looks like jobs aren't going so great, and you do have extra money to invest, like what do? Well, you just put your eggs in different baskets. One of the things that I don't like about this current culture that we see on YouTube is there's too many people like, oh yeah, look how awesome NVIDIA is. I'm YOLOing 100%. In fact, I'm even borrowing money to go into NVIDIA. I'm putting 200% of everything that I'm worth into one thing, and it's like, it's great when it works, but when it doesn't work, you can really, really blow up your account. So be careful out there. And so, just general advice is manage your risk, right? If you're going to put money into more, let's say, risky assets, don't put any more money than you can afford to lose. And generally speaking, so just my opinion on stuff, like, hey, if I can get CDs, bonds, or savings, just regular savings account that give me like guaranteed money and I'm not going to lose, right? I'm going with some of that, right? You want to go with some stuff you're not going to lose. Hey, if you can pay off debts at a high interest rate, right? So for those you have the high interest rate credit cards, pay those things off, right? It's guaranteed, right? Guaranteed that you pay it off and you're going to save money on paying interest. And then you can throw your money also into index funds, right? You mix it around. So it's not just like one strategy. There's multiple things, and the allocations are going to be whatever's appropriate for you. So essentially, for me, when I look at the market and stuff like that, and also, let me show you this chart, because like I know a lot of people are new to this stuff and never like see this kind of stuff before. But if you look at a chart like this is called the Shiller PE ratio, and it shows you like, okay, as the market as a whole, are we expensive or cheap, right? Meaning that, are you getting good value on your money or bad value? I mean, unfortunately, it's been like this for a while, that apparently has been a bubble. This keeps going up or keeps getting bigger, however you want to say it. But the Shiller PE is the price of stocks compared to how much money the company earns, right? We're sitting at a read of 34.81. That's very, very high when the median is like 16. You guys can see it for yourself there. So I always say the same thing. When the Shiller PE hits like 40, just get out of the market. I'll just be honest with you. But we've been kind of flirting with this, like how are we possibly going to go? The problem though is that the situation, if you have a generation of investors that are used to easy money, free money, low interest rates, they want to keep that money flowing, right? And that sort of pumps up the price of our equities, this kind of stuff. But how long can we keep printing and essentially keep this cycle of endless borrowing going? There comes a point where you got to slow down a bit, and that's sort of, I think, what we're seeing. But you never know, guys. I'm just telling you the truth on this stuff, and so this is sort of like, if you don't want to stress out about this stuff all day, every day, that's why your index fund is your safest bet, because you don't have to be worrying about picking industries, right? Everyone's going to be different on this, of like, hey, you know what? I want to take a little bit more risk. I want to go into tech, or you know what? I want to get some more fixed income kind of stuff. Everything's depend on you. So I'll show you guys this, for example. I just show you everything. You can see here. So today, the tech, consumer discretionary, right, communication services are all taking the hits. If you want to look at like, I have it here. Yeah, if you want to take a look at like more bubbly stocks like a Coinbase, they've been I think it was like 9 straight trading sessions that this one has been going down. So that's been on a losing streak. I think your Bitcoin's been on a losing streak. For me, one thing I always look, where's your Bitcoin? I don't think I have a Bitcoin chart up here. Well, this Coinbase is fine. For me, one thing I always look at though is like, okay, how far can this thing go in the downwards direction? Is I look at the overall market, say I told you the Shiller PE, then I look at like your bubble assets. So let's using Coinbase as an example, or you could look at NVIDIA, and it's like, okay, how far can this thing possibly go? NVIDIA actually, even though it's been down the last couple of sessions, the bubble actually hasn't really popped entirely, right? This is in the past year. So you can see the peak was at like 130 or something like that. And we're still at 100. Once that starts dipping below 100, it'll start to get more interesting. And then you want to look at the P ratio of this thing. So generally, P ratios is you want to have it related to your growth. So if your growth is exceeding your PEs, then you're in the clear. And that's why then you watch the the earnings call and say how are you looking forward going ahead? Are people buying your products or not? And that's why I mentioned Apple. It's related to that. Now, there's one thing I want to mention to you guys, which is a key one here. This probably won't make headline news, but I think it's one of the most important news out there. There's a lot of pressure on Kamala Harris to get rid of Lena Khan and Gary Gensler. So Lena Khan, I'm a huge fan of. If you don't know, she's over at the FTC, and essentially she goes after monopolies. Okay, So one of the things, for example, if you're Wall Street, you're like, oh man, I hate that, Lena. I want to merge all the grocery stores into one, one company. Why didn't you let us do that? Or Nvidia's like, I hate those people over at the Fed. I want to make sure everyone buys my chips, and if they buy my chips, they're locked into my ecosystem, and no one else can compete. Or if you're Apple, you're like, I hate that Lena Khan, and I hate the government. I want to have my app store, and I want to charge as much money I want to people, and you have no choice. You have to be on my app store. You guys get my point of this. The issue though is I'm actually a big fan because the question I pose to you is, say in your neck of the woods, do you like going to Ticketmaster? Do you like having only one choice to buy tickets? Right now, Ticketmaster will argue they're not, or I should say, Live Nation, that they're not a monopoly. But I'll let you guys decide on that. But I personally don't like Ticketmaster. Never have, never will. Or for it, I grew up in the 80s and 90s. I remember the whole Pearl Jam stuff. If you guys are old enough, you can give a shout out to Pearl Jam. But and I think Ticketmaster had a problem recently with Oasis tickets. That's in the UK, I believe. If you guys are in the UK, you can chime in on that. They had a problem with the Taylor Swift stuff. So there's always wranglings of that. I'm just using the Ticketmaster thing as an example, but I think there's a lot of companies out there that could use a little bit of wrangling. And this is always the challenge, right? So as an investor, for example, let's say you have money in Live Nation / Ticketmaster, and it's like, well, I want to be a monopoly because I got stock in this thing. But that goes back to the issue of like, are you owner or are you worker? For many of us, you're on both sides, right? So you don't necessarily want airlines to cheat everyone all the time and do whatever they want and offer you a crappy service, etc. You want them to pay their workers, right? So from the worker perspective, yeah, pay the workers. From the Wall Street perspective, you're just like, no, don't pay your workers anything. Screw those workers. They don't need any money. Just get all the profits for yourself. But I'm making jokes here. But the point I'm trying to say is like we're all connected, and chances are your best bet is to play both sides. Meaning that have a good job, get a good contract from the worker side, right? Do those things well, and then be on the ownership side. Have good stocks, have good assets to where you're profiting when companies make money. Like play both sides. I think that's the safest way, and sort of the message I want to play with you on that. And then not just play both sides and say on the ownership of the business side or the worker of the worker side, also be in other things. Get that guaranteed money from your CDs, from your bonds, from your savings, this kind of stuff, right? And just sort of manage your money in a way that guarantees that you're going to be okay, opposed to taking too many gambles by YOLOing on bubble stocks that are often pumped very heavily on YouTube, etc. So I know we talked about a lot of this stuff on this particular episode, but I just wanted to have the chat with you, kind of understand what's going on, and think about not just stocks as being like numbers on a chart, but like part of a larger economy, and sort of why you track what everything does and how we're all connected. So anyway, thanks for your time, everyone, and I'll catch you on the next video.